See, in this pre-budget meeting with the Finance Minister, FIDC, I represent FIDC, which is the body of non-banking finance companies in India. So what we've requested Finance Minister is, now that the NBFC sector in India has become the third largest in the world, RBI latest data shows that our credit to GDP ratio is about 13.6%, and we are almost 1/4 of the total bank credit, meaning the sector is growing. That means there is a lot of credit which the sector is dispersing. So it directly means we need more funds so that we can on-lend more. Secondly, there is another data reported by RBI that in October month itself, some of the large NBFCs have borrowed overseas to the tune of $5.5 billion, which has been a tremendous increase. And this money is being borrowed overseas for on-lending in India. So the idea here is, why this has happened is because bank lending to NBFCs has come down significantly. This is a fallout of the RBI circular issued November last year, where RBI had increased risk weight on bank lending to NBFCs. So what we are saying is that large NBFCs are now borrowing largely from overseas also, and a large number of small and mid-sized NBFCs who are dependent on bank borrowings are now borrowing from large NBFCs, which is increasing their cost of borrowing. So all in all, there is a very strong case here for direct refinance window provided to NBFCs. So a specific fund allocation, funds which are meant for MSMEs, for small borrowers, and for environment friendly assets like electric vehicles, all that funds can be dedicated and given to organizations like SIDBI and NABARD for refinancing to NBFCs, just like National Housing Bank, which refinances HFCs. Secondly was relating to the recovery part, that today we don't have any direct recovery mechanism. SARFAESI Act, though we are covered, but in order to enforce security under SARFAESI, there is a rider that the loan ticket size has to be minimum 20 lakhs. Whereas NBFC's loan ticket size are small loans. So we are not able to enforce security. This is pending since very long. And as a result, recently there was a matter which was raised in Supreme Court also, that check bouncing cases have gone up significantly. And that's because NBFCs don't have any recovery mechanism. We are forced to follow Section 138 file cases for doing our recoveries also. So I think there is a need for recovery. Finally, on the taxation front, every non-individual borrower who borrows from NBFCs needs to deduct TDS. It is becoming an operational nightmare. There is no benefit to the government. There is no extra revenue coming to the government. There is no benefit to the borrower or to the lender. It is causing an operational nightmare. And NBFCs are the only class of financial institutions who are not exempted. So we have requested for exemption under 194A.